Mm. Hello everyone, welcome back to EQ Markets Global YouTube channel, and this is the voice of 𝗦𝗛𝗔𝗥𝗘, the head market analyst for EQ Markets Global. And I want to make this short tutorial video showing you just exactly how I confirm my trades. Now, this is long-term coming, all right? And I know most of you have been demanding for an explanation on how to use the commodity channel index. Now, there are too many ways on how to confirm trades, okay? So just pardon me. Let's go through it together. So I'll just simply type trade confirmation techniques, okay? Trade confirmation techniques. Now, there are so many ways on how to confirm trades, and a whole lot of them. Of course, you probably may want to use price action, okay? Number one is you probably may want to use price action, okay? Price action, sorry about that. All right. If not price action, number two, you probably may want to use the oscillating indicators, right? Oscillating indicators, because also there are very good ways on how to confirm trade, okay? When I mean price action, I mean price action patterns, okay? Price action patterns, candlestick patterns, so to say. Okay, let me make it more clearer. So candlestick patterns, okay? So candlestick patterns under price action, or you can also use the oscillating indicators. Now, these are the two very simple and very common ways on how you can confirm your trades. Today, I'm going to be talking about the use of one of the oscillating indicators, all right? So I'm not possibly going to put you through price action patterns, maybe the rejection candles, or maybe the engulfing patterns, or the Arami, the shooting star, the three black crowds, or whatever. I'm not going to be showing you all that today in this video, right? I will go straight to oscillating indicators, and under oscillating indicators, I will be looking at just the commodity channel index. Now, basically, let me give you an overview of what oscillating indicators look like, okay? Just an overview of what oscillating indicators look like. So oscillating indicators, all right, oscillating indicators are indicators, all right, oscillating indicators are basically indicators, okay? They are indicators used to study the following. I'm being careful with the words I'm using. I'm being very, very, very careful with the words I'm using. So they are used to study the following, right? So number one that the oscillating indicators can be used to study is price momentum, okay? Price momentum. Now, I know already that we already have momentum indicator, right? Now, even the momentum indicator can be considered an oscillating indicator, okay? So oscillating indicators, one of the things that it can be used to study in the market is price momentum. And when I say price momentum, I mean strength of the market participants, okay? Strength of the market participants, right? Now, that's number one thing. Number two thing that the oscillating indicators can also be used to study is the direction, okay? The direction of price movements. Now, please just follow me. I'm going to do my best to explain it in the very easy and best possible way that anyone and everyone would understand, right? So just follow me. So number one, I said price momentum. Number two, I said price direction, okay? That's direction of price movement in the market, all right? Now, is there number three? Another thing, number three, that we can use to also study in the market, the oscillating indicators, is behavior, okay? Behavior of the market participants. Now, Oscillating indicators are also very good indicators if you know how to use them very well. If you know how to use them very well, they can also be a very good way to study and understand the behavior of these market participants. So these three is what basically oscillating indicators are used for, right? Number one, to study price movement, price momentum in the market. That is the strength of the market participants. How strong are the bears? How strong are the bulls, right? Number two, the direction of price movement. And number three, the behavior of these market participants. If the buyers are to take over, what are their behavior? If they get to a certain zone, what would they most likely do? All right. You can tell all their behavior, their characteristics, if you understand the oscillating indicators. Now, what exactly are these oscillating indicators, right? Or what are some examples of these oscillating indicators? Okay. What are some examples of these oscillating indicators? So let me put it, oscillating indicator examples. Okay, so yes, number one, we probably have the most famous one. I think this is more famous than every one of them, right? We have the RSI, and of course we have also the moving average convergence divergence. Number three, we have the momentum indicator, right? We have the momentum indicator as well. And number four, we have the stochastics. Yeah, we have the stochastics. And number five, we have the CCI, which is the commodity channel index. Number six, we have, which one have I not mentioned right now? Which one have I not mentioned right now? I think there are a whole lot of them, but I think these are the very famous ones. The RSI, the MACD, the stochastics, the CCI, the momentum indicator, as well. The ADX indicator also is an oscillating indicator, right? The ADX indicator. And for some people that also know the marker, yeah, the marker is not really common when you on TradingView, but for those of you that use, I think MT4 or MT5 precisely, you're going to see the marker, right? So these are some examples of oscillating indicators. Now, all these indicators are very unique. They are very, very unique in their own way, and in their own methods and build-up. But they all boil down to what? Three major things. They all have three major things in common. They are used, or rather, let me put it this way, they try to tell you price direction. They also try to tell you price momentum in the participants of the market. They also try to tell you the behavior of the market participants. All these indicators that I've mentioned that are examples of the oscillating indicators, these are the three common properties or the three common things among them. All right. So anyone that you want to pick and study, ensure that you study it very well. And of course, another thing I would want to say, please, is none of these indicators are independent of themselves, right? So you can't say that because you know how to use RSI very well, or you know how to use MACD to find convergence and divergence very well, then you want to use it alone. No, none of them are independent of themselves. All of them can only be effectively used in addition to what? A strategy, in addition to price action, in addition to setting trend following indicators to build a strategy, and so much more, right? So in the next video that probably I'll be dropping about the CCI or any of these indicators, I'm going to be teaching you how you can build a 90% win ratio strategy, all right, with just simple understanding and simple concepts. I'm going to build one in that video as well for you. A very simple strategy that both beginners, intermediate, and advanced traders are going to be using. All right. So let's go straight to the CCI. All right. So I'm going to be talking about the CC high right now. I'm going to be talking about the CC high right now. All right, so the CCI is a short for commodity channel index. All right, commodity channel index. Now, the commodity channel index is an oscillating indicator that can be used to tell price momentum and price direction and market participants' behavior, just like I earlier mentioned. And just like it is being mentioned under oscillating indicators. Oscillation simply means that it moves within a certain defined axis, right? It moves within a certain defined axis. And of course, the axis that this moves is the positive 100, all right? And of course, it also moves between the negative 100, okay? So these are the price levels of the commodity channel index, the positive 100 and what? The negative 100. Now, let me go straight into pure business and show you how exactly this commodity channel index works, how I've been using it to confirm trades and have more than 90% win ratio in all of my trades, right? So if you're ready for me, I think I'm also ready for you. So let me just show you very quickly. Okay, so I have this. Okay, so I can also have this, pardon me. And then I can also have this. Amazing. Okay, so I can take this out, right? Because I've already explained that. So we're talking about the commodity channel index now. Okay, so here I have 100. So here I have 100. That's the positive 100, right? That's the positive 100. And of course, here I have the negative, right? I have the negative 100. Okay, amazing. So we're doing well. We're doing good, right? Okay, so let's come back here now. So this is what it means, right? So the commodity channel index, it oscillates between the positive 100, right? And of course, the negative 100, and it keeps oscillating that way. Now, for every single time this commodity channel index oscillates and moves between negative to positive and back to negative and back to positive, they mean something. And all the three things I mentioned about oscillating indicators can be learned inside this commodity channel index as it oscillates between negative 100 to the positive 100. So I'm going to be spending the next few moments showing you all the three things, how you can understand it and how you can use it for your next trade setup for confirmation or anything at all, right? So of noteworthy here, we have the zero line, okay? We have the zero line here, okay? So this is the zero line, and of course, this negative 100, positive 100. So let's continue now, right? I hope you're following. I hope you're following. So above the positive 100, right? Above this positive 100, we simply have the market saying that, look, this simply means, let me put it in the easiest way you can remember. When the commodity channel index goes above the positive 100, what it means is what? bullish momentum. Okay, but now I'm not going to call it momentum. I like to call it bullish power or bullish pressure, right? So let me call it bullish pressure, but it still means what? Momentum. Okay, now listen carefully. So when it goes above the positive 100, what we are seeing is what? Bullish momentum. And what do I mean by bullish momentum? Please write this down. What I mean by bullish momentum is that buyers are very much willing to continue to push prices up. Buyers in the market are very willing. They are collaborating. They are energized to continue to push prices what? Upward. So when it gets above 100, don't say it is overbought, because the term overbought usually makes traders think that it is time for them to sell because market is overbought. Since it is overbought, it will start to sell. So I'm not going to be using any of those terminologies like overbought and oversold, and I'm going to be disabusing the use of those terminologies in any of my videos that I'm going to be talking about. Even when I'm teaching you RSI, I would never mention overbought, oversold. Rather, I would disabuse your knowledge about them, right? So it is not overbought, but bullish pressure above 100, bullish pressure or bullish power. It simply means that buyers are very much willing to continue to push prices upward. And of course, that is what it means. Please take note. Now, I will come back to explain more things on that. Follow me now, where we have the negative 100. So when the oscillating indicator comes below the negative 100, what does it mean? Follow me. This simply means what? Bearish pressure. Okay? This simply means what? Bearish pressure. Okay? This simply means bearish pressure. And what do I mean by bearish pressure? I did not say oversold. Again, now, I did not say oversold. Rather, I'm saying what? Bearish pressure. So what does bearish pressure mean? Bearish pressure simply means that sellers are dominating the market, but not only that they are dominating the market, they are also very much willing to continue to push prices below. All right? They are willing to continue to push prices in their favor, which is what? A bearish movement. Do you understand that? Now, if we get that, let's come back now. I'll add a few more things to it. So for every single time we see the commodity channel index go above 100 and stays above 100, right? What this simply means is what? Bullish dominance. Okay? This simply tells you bullish dominance. Okay? Please follow me. You need to understand all of this. For every single time it stays above the positive 100, what it's telling you is that is what? Bullish dominance. And for that period of the bullish dominance, prices will continue to go up and up and up and up until the buyers are no longer willing to continue to push prices upward. Now, in the same way, when we see prices fall below the positive 100, and for the time it stays below the positive 100, what it simply means is what? Bearish dominance. Okay? What it simply means is what? Bearish dominance. So for all the time, prices will stay below the positive 100. What we will see is what? A bearish dominance. What do I mean by bearish dominance? It simply means that prices will continue to go bearish, prices will continue to go south until the sellers are saying that they are no longer willing to continue to push prices in their favor. Now, if you understand this, the next question that would probably come to your mind and you would want to ask is, when do I know, or when can I see it that the bulls will say, look, we're no longer interested in this market? When will the bears, how will I know when the bears says that, look, we're no longer interested in this market, right? We're no longer interested in dominating this market. So we want to give off our dominance. When would you know? And of course, that's the most important question If we can answer that question, then we can answer a very big question on how to use the commodity channel index effectively to confirm trades. So follow me, that's the question I want to answer now. So remember now, I've already established the point that for all the time that the price is moving above the positive 100, that's bullish dominance, right? But immediately, prices from above comes below the positive 100, okay? Immediately it comes below the positive 100, just like we have here. Immediately it comes below the positive 100. What this simply means is that the buyers are no longer willing to continue to push prices in their favor. So they are giving off their dominance. And so at that point, what we then have is what? Bearish confirmation. So at that point, the bears will up in the market and do what? Continue to push prices in their favor. Listen carefully. When it goes above, bullish pressure takes over, and so long the commodity channel index line stays above the positive 100, the bulls dominate the market. But immediately they come from above the positive 100, they come below it, right? What it simply means is that the bulls are no longer interested in that market. And at that point, it gives us what we call a bearish confirmation signal, right? It gives us a bearish confirmation signal. So it is only when the CCI goes above and come back below positive 100 that we get a bearish confirmation. Let me say that again. It is only when we see the commodity channel index goes above the positive 100 and comes back below. The point it comes back below the positive 100 is when we see a bearish confirmation. Please note, prior to the time it is coming below the 100, positive 100, it must have gone above. It must have gone above the positive 100 to come down back. All right, it mustn't stay this long, just like I drew here, right? It mustn't stay this long, right? It mustn't stay this long, but at least it must have gone up and come back below. Now, again, for the bearish dominance, the point at which the bears begins to move above, okay, the point where the bears begins to move from below, they begin to move above the negative 100. This gives us what we call what? That confirmation point, telling us that, look, the bears are no longer willing to continue to dominate this market. So they are giving off their dominance, right? It simply means that the bulls will jump into this market, right? Remember, there are only two participants, right? The bulls and the bears who constantly fight, right? So we are going to be having some bullish confirmation only at that point, right? We're going to be having some bullish confirmation only at that point, okay? So now, before I go ahead to tell you more confirmation techniques, remember, let me take you back to memory lane. We started and I said that oscillating indicators are indicators that are used, number one, to study price momentum, number two, price direction, and number three, market market behavior, right? So number one, price momentum, right, which is price pressure. I've already showed you how the commodity channel index is used to study the pressure in the market. And who exactly is having the pressure? Is it the bulls or is it the bears, right? And number two is price direction. I've already showed you how the dominance or the pressure in the market can determine the direction or flow of prices. That's number two. Then number three, market behavior, right? The participants and how they think and how they behave. I've already shown you on the commodity channel index that, look, above the positive 100, the behavior is that, look, we're dominating and they will keep dominating the market. But immediately they want to give up their dominance. They want the bears to take over, right? For us to get a bearish confirmation, then it simply means they come back below the positive 100. That's market participants' behavior, right? So we're going to learn one more thing, and then we will go to begin to use this to confirm and how we can learn how to use find confirmations in the market, rather. Sorry, forgive me. Okay, so guys, so I believe we can go ahead, right? So confirmation number one, when the commodity channel index goes above the positive 100 and comes back below, we have bearish confirmation number one. And bullish confirmation number one is when the commodity channel index comes below the negative 100 and comes back above, right? That's when we have very bullish confirmation number one. Now I'm going to be showing you some more hacks and tricks, right? I'm going to show you some more hacks and tricks. Okay, so let me take all of these out. Okay, so still follow me, right? So bearish confirmation hack number two, using the commodity channel index, right? So it is not only when it goes above the positive 100 and comes back below, we have a bearish confirmation. There are certain times that prices will literally go above the zero line. Now, the zero line is the neutral line. I've really not said anything about the zero line, right? But the zero line is the neutral line. But on that neutral zone, on that neutral ground, battles can also be won. So on that zero line, if prices comes from below it, and of course goes above it and come back below. Now at this point, what it simply means is that the bulls are no longer willing to continue to push prices upward. So the bears will take over. So we have a bearish confirmation number two, right? So this can also be a bearish confirmation. All right, so this is bearish confirmation number two. When prices goes above, when the commodity channel index goes above the zero line rather, and comes back below, right? Again, we have when prices comes below the zero line, right, and of course goes back above. At this point here, it simply means bears are no longer willing to continue to push prices upward. So we have what we call the bullish confirmation around that zone. So here again, we have some bullish confirmations and prices will begin to go up. So these are the two hacks that I'm going to show you on how you can use the commodity channel index, no matter your strategy, whether you're using trend line, whether you're using trend lines or you're using SMC concepts, maybe the point of interest, the fair value gap, and whatever, or you're using moving averages to find dynamic support and dynamic resistance zone, whatever zones that you're looking at, right? These are ways to confirm your trade. So can we go over to the practical now? Can we go over to the practical? Can we go over to the practical? So I'm going to take all these out, right? I'm going to take all these out and let's come back to our chart. So I'm going to show you now how to put it up, right? If you're using the MT4 or MT5, simply go to indicators. You're going to see the commodity channel index, right? And of course, if you're using your trading view, simply click on indicators. And under indicators, you're going to just simply type in the CCI, okay? Look at it here, commodity channel index. So I just simply click on it. And of course, by just one click, it is added to my chart. Now, some people would ask, what are your special features, right? No problem. I'm going to tell you my special features when using the commodity channel index. So let's go over to the settings, right? Let's go over to the settings. So first, the period I'm going to be using is the period 20, okay? I'm going to be using the period 20, okay? So let me just spell that out for you first. All right, so I'm going to be using the period 20, okay? And secondly is I'm going to be applying it to weighted close, what is called the weighted close, okay? So you can find that on MT4 especially, it is called weighted close. And of course, the weighted close is high, low, close divided by 4. So even if you don't find it as weighted close, just know the formula, right? HLCC all over 4. It's already there. It's not something you're going to be doing yourself. Okay, so let's look at it together. Let's go back to the setting again one more time. Let's go back to the settings one more time. So you can see that if you're using the trading view, it is length of 20, right? Now for the source, remember I said HLCC by 4, right? And of course, you can leave the method to be SMC, to be SMA, which is a simple moving average, right? The length to be 5, and you click on OK. And you're going to be having your commodity channel index. Now, let's make some quick practicals before we go, so we don't get this video to be too long, right? So look at it now. This is so for me, I use it to confirm across all time frames. Yeah, I know that's already another thing that some people would be asking. What time frame can we use this? I use it for confirmation across all time frames, but I am not a scalper, so I don't have much business with 1 minute time frame. And most times I don't take my trade on 5 minutes time frame as well. So the lowest time frame I could be looking at is 15 minutes time frame. So whatever I'm doing, I already know the direction of market on the higher time frame, H4 daily or weekly time frame, and prices must have come to my point of interest on those time frames before I'm scaling down to the 15 minutes time frame to find sniper entries. All right, so I can still use the commodity channel index as confirmation to my trades. Okay. So let's quickly continue now. Let's quickly continue now. So I'm going to be showing you something. So if I'm not making analysis for you now, but I just want to show you. If you notice carefully, right? If you notice carefully, this particular zone here was a support area, right? It was a support area. So when we had this price come into this zone here, right? When we had price come into this zone, because it was a support area, we would be expecting a buy. But we're not going to be jumping into this market for a buy. We would wait for confirmation. So for me, the way I trade without confirmation, I don't ever enter a market, right? So how do I get that confirmation? Remember what I said. When the commodity channel index, right? This is a negative 100, this is a positive 100, this is a zero line, right? So when the commodity channel index comes above, right, the positive 100 here, right, so here. So when it comes above the positive 100 here, right, I get my confirmation to go in for what? A buy. So I could be taking a buy by the next candlestick, yeah? All right. Now you might say that, look, this is going to delay, or it's safer. Trust me, it's very, very, very safe. It's really, really safe. You're going to be really, really, really safe, right? So I can take my trade setup here, and of course my stop loss would be below the wick here. Now that's by the way. So we're here to find confirmation. How we can use these 4 confirmations, right? Now, again, watch how market change directions, right? Of course, we saw when prices fell below. You can see that, right? So particularly on this candle here, yeah, on this candle here, we saw that prices went above and came back below. What did I say about going above and coming back below? That is a bearish confirmation, right? So by the next candlestick here, prices began to fall all the way to the downside until we got another bullish confirmation. So let's go again. We find more. Now, again, let me show you something. Remember, I told you that when the commodity channel index goes above the positive 100, right? Above the positive 100, like we have here, it went above the positive 100. We have what? Bullish dominance, right? We have bullish pressure. But for the long that it stays above it, we have bullish dominance. It simply means that buyers are willing to continue to push prices to the upside, right? So what do we have? Up until here that we had a bearish confirmation, you can see how market moved over, market moved over 200 pip movement to the upside. It simply means that the bulls were truly dominating the market, as they earlier said, right? So this is how we can be using it. This is how we can using it. Or another example is here, right? Price went above here, and of course it stayed above. It stayed above until we saw a sell-off signal here, a bearish signal here. Now look at the time it went above to the time it came back below. How many pip movement is that? That is over 100 pip movement. Now, if you're thinking what I'm thinking, there's actually a strategy around that. So you can be trading the dominance and not only the confirmations, right? So this is exactly how you can use the commodity channel index to find confirmations in the market. So I'll just do one last example because this video is already really long, right? Let me go to the daily time frame, and on the daily time frame, you're going to see that. All right, now see GBP NZD, right? GBP NZD. Remember what I said? I said that bullish confirmation number 2 is when we have what? The commodity channel index fall below the zero line and comes back above, just like we have here, right? It comes back above. Oh, let me take that out. Still not fine. Amazing. So it comes back above, right? What do we have here? we have another confirmation there, right? A bullish confirmation. And you can see prices is beginning to make its way to the top. And so, of course, if we had seen this early, we probably would have taken it by this day's candle, all right? Our stop loss below here. And of course, we would be looking at most likely hitting this top target here. And this will present us with 1:4 on the minimum. Can you see that? So you can use this for confirmations all the time, all right? Whether you are a beginner trader, you're an intermediate trader, you're an SMC traders, because even most SMC traders, they find it really difficult to find confirmation or confluence in the market. So this can be a very good confluence for you to confirm your trades before taking them. All right, guys, I hope this video was really, really helpful on how to use the commodity channel index. For those of you who are lovers of RSI, I'm really not a lover of RSI, but I can show you 1001 arc on RSI. So subscribe to this YouTube channel, stay tuned, all right, on this channel. I'm going to be sharing more tips and insights on how you can have a best trading experience. Bye for now.